Hello there. Welcome back to grade 11 accounting. Today we want to look at a question from June 2023, working on a provincial question paper from Gauteng province. And this question is on partnership, and also specifically on partnership, we need to calculate the interest on capital and then also prepare the current account. So on this question, it is 25 marks, and it requires us to spend about 17 minutes on average on this question, right? So this question on the required part 2.1 is saying calculate the interest on capital for Martin Nike, and that question has got 5 marks. And then the second part, which is 2.2, is requiring us to prepare the current account for notes for Maroni fashions. So this is what we have in terms of required part. And now in the question, we've got information whereby we've got part A extract for the pre-adjustment trial balance of Maroni fashions on 28 February 2023. So this is what we have in terms of the balances that we are given, the balances section, whereby we've got the debit column and the credit column, and we've got some balances that are given there. Then beneath that, we have got some information that is there in terms of, for example, for B, we've got the net profit for the year, which amounted to 1,180,400. And then we also have the partnership agreement, the terms of partnership agreement. Remember, when a partnership is, before it starts, partners have to agree in terms of certain conditions, profit sharing ratio, on how the interest on capital is going to be calculated, and even interest on drawings. So that's what consists of the partnership agreement, something that has to be agreed before the partnership commences. So that is what we have there. And then beneath that, we go down, we see that this is the end of the question. So we are going to refer to this additional information as we make the calculations and the preparations that we are going to do for the current account notes. So we can start on 2.1 there, where it's saying calculate the interest on capital for Martin Nike. So we've got two partners that are there. We've got Martin Nike, and then we've got Ronnie Jordan. So we need to calculate their interest on capital separately for Martin Nike, then we also calculate for Ronnie Jordan. So we go down now to see what the explanation do we have in terms of this interest on the capital. So if you go to see here, point number 1, 2, 3, it's explaining about interest on capital, and it's saying the partners received interest on their capital balances at a rate of 6% per annum at the beginning of the year. The interest rate was increased by 2% with effect from 1 December 2022. So that is what we have. So it means we are going to calculate this interest on capital for 2 different periods for both partners. That is from, remember, the year is ending. We can recheck in terms of where the year is ending, where we have it here. The year is ending there. That is on, if you check the year, that's where the year is ending. That's 28 February 2023. And if you go down now to what we are being told there, in terms of the explanation, we are being told that the interest was 6%. That is from 1 March. I remember the year is ending on 28 February. So from 1 March, it increased. The rate was 6% up to 1 December. So we can count the number of months that are there before it increased by 2%. So we remember the year is ending on 20th February. So we are saying March, April, May, June, July, August, September, October, November, and then on 1 December, it increased by 2%. So we can count how many months do we have there. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9. So it means we've got 9 months before the interest on capital increased. So it means for these 9 months, we're going to say 9 over 12 times the interest on capital per year. Remember, the rate is per annum, which means per year for 12 months. So we are going to apportion for 9 months so that we see the proportion in terms of when it's before it increased. So after it increased, now we can count again. Remember, we have got 12 months, so it means after it increased, now we are saying 12 minus 9, which is 3. So we've got 3 months after. Then it was now 6 plus 2, 8% now. So basically, we are saying 8%. is for 3 months. Then 6% is representing 9 months. So we can make our calculations according to that. So now we can calculate our interest on capital. We can make the calculation there whereby we are saying before it increased for Martin, we are saying remember we are saying 6%, so it's 0.06 here. 6% as a decimal is 0.06. So we say let's say 0.06. Then we multiply by the capital for the for the partner. We are on Martin Nike, so it's 1,600,000 the balance that we have for capital for Martin Nike. So we multiply by 1,600,000. So we come here, we say times 1,600,000. That was before it increased. Then we multiply by, we have got 9 months before. This is before and this is after. So we now multiply by 9/12. And then after it increased, now we are saying 0.08. It was now 8%. 6 plus 2 to get the 8%. So this is 8%. And then we multiply by the capital balance, which is 1,600,000. Then we also multiply by the number of months that are there after it increased. We put 3/12. So basically, that's what we are going to summarize in our answer section. Here we have got if you check there, we have got the section that we have there. For interest on capital. So we can just make the calculations there. So we are saying now, having this now, we can now calculate to find the figures there. So if you calculate there, you would see that here, if you calculate there, you are supposed to get, let's try to calculate there and see what we get there. So you see that on the first part there, you are going to get 72,000 here. And then here, if you calculate here, you are going to get 32,000. So obviously, we are going to add to get the total there, total interest on capital. So in say 72,000 plus 32,000, we are going to get 104,000. So that's what we have on the first part. Remember, this interest on capital is for the first partner there, which is Martin Nike here. It's only the question is only specifically asking for the interest on capital for Martin Nike. So for part 2.1, that's where you can get your 5 marks by this start working. So you put 104,000. So we go to the second part now. The second part is saying prepare the current account note for Maroni Fashions. So if you come here now on our answer section, this is the layout that we have in terms of the current account note for Maroni Fashions. We've got column for Martin, column for Ronnie, and then we've got the total. So the net profit for the year, we've got this total 1,180,400. So here we are going to leave this space for net profit for the year. We are going to come back. Remember, the net profit for the year is also equal to primary distribution plus secondary distribution. Then you get your net profit for the year. So we are going to leave that one, and then we go to the part of salaries. We go to the part of salaries there, so we can go back to the question and find out what explanation do we have in terms of salaries. So if you go back there, you would see that on salaries, I think we've gotten an explanation that we have there beneath that. So we go to the first point saying at the beginning of the financial year, Martin Nike is entitled to a monthly salary of 16,000, and Ronnie Jordan earns 25% more than Martin Nike. Their salaries were increased by 10% with effect from 1 August 2022. So this is what we have in terms of the salaries. So let's try to see what we can apply there. So if you look there, we have got we are only given the salary for Martin Nike. And then we need to calculate the other partner's salary. Remember, we are given a rate there in terms of what the other partner is earning there. So what we can do there, we can say before the increment, remember the salary is increased by 10% on 1 August. So we can count the number of months that are there before the salaries are increased by 10%. Remember, the year is starting in March, 1 March. So we are saying March, April, May, June, July. So we've got 1, 2, 3, 4, 5 months. 5 months before it increased. Then when it increased, obviously we say 12 minus 5. We say 12 minus 5 to get 7. That is when. So this is before increment, and this is after increment. So what we are going to do there, we are going to, let's start by calculating the salary for Martin. So we can just say Martin. Martin's salary. So for Martin's salary, we are saying we have 16,000 monthly to a monthly salary of 16,000. So this is monthly. So before the increment, we have 5 months. So we are going to say 16,000 times 5. Here we say 16,000. Then we multiply by 5. That is before. Then we are going to add after the increment. It decreased by what? By 10%. So we are saying 16,000 times. Remember, when it is increased by 10%, before it increased, it was 100%. And then after it increased, now we are saying plus 10%. So we are going to get 110%. So as a decimal, it becomes 1.10. So we are going to multiply by a factor of 1.10 there. Then we get the amount after the increment. Then the answer that we get, we now multiply with the months. So the months that we have after the increment, which we have 7 months after the increment. So it's here we multiply by 7. So that's what we are going to do for salaries for Martin. So if you do that there, if you multiply this one, then the answer that you get, you multiply by, sorry, 8, but to this one there, you are supposed to get the salary. You are supposed to get the salary for Martin there, which is, let's try to calculate there. You get 203,200. You get 203,200. So this is the figure that we have. So you go with the figure and put it under Martin on the note. So here we've got 203, 200. So that's what we have there. So we have 203 and then 200. So we go back again to see now the salary for Ronnie. The salary for Ronnie there. We try to see what we have for Ronnie. So for Ronnie now, we are also, remember we are starting with we are not given an exact amount in terms of Ronnie, but we can calculate it by the salary that Martin is earning there. So what we are going to do there, we can just say, we are now on Ronnie. So on Ronnie now we are saying, remember the instruction is saying Ronnie Jordan earns 25% more than Martin. So we are saying when you multiply that one for, this one is for Martin 16,000, then Ronnie is earning 25% more. So we are saying 100% before that is Ronnie's earning, that is Martin is earning plus the 25% increment, so it becomes 125%. So if you convert it to a decimal, it becomes 1.25. So what we are saying is 16,000, 16,000. Then you multiply by 1.25 to see what Ronnie is earning before the increment. And then the number of months that we have there, we have got 5 months before, so you multiply by 5. Then you close your bracket. Then you add now after the increment. After the increment, now we are saying there is also a 10% increment. This means the answer that you get when you multiply 16,000 by 1.5 here. So if you multiply here, that's when you are going to get the Ronnie salary, before the increment. So the answer that you get here, you multiply it again by 1.10, which is 110% after the increment now. So we are now saying 16,000 times 1.25, then you find, sorry, 1.25 there, then you are going to find the salary before the increment. So if you say times 1.25, we get the salary for increment, then you multiply it again by the increment. Now it becomes 1.10. So that's what you have there. So if you do that, if you multiply this, the answer that you get, you add to this one, you are supposed to get 254,000. So here now it becomes 254,000. So that's what we have there. So you can just go and put that one under so now for Ronnie Jordan. So here now here it becomes 254,000. Then you go to the bonus. We go to the bonus there. The bonus now, we try to find out in terms of the bonus there, what explanation do we have? Right, this one is the explanation in terms of the bonus, saying Ronnie Jordan receives half of his monthly salary after the salary increase as a bonus. So we can just try to see there. Remember, after the salary increase is this second part here. So we can just say 16,000 times 1.25, and then after the increment you multiply again by 1.10. So let's try to calculate that one so that we see what we get there. Say 16,000, then you multiply by 1.25, you multiply again by 1.10, you get 22,000. So this is the 22,000 is the amount after the increment. And then it's being said this amount, half of it is the bonus. So after the salary increase as a bonus, Ronnie Jordan receives half. That's where the explanation is half of his salary, half of his monthly salary after the salary increase, which is this one. So we can divide this by 2 and you get the half, and you get 11,000. So the bonus is only for Ronnie. So we're going to put 11,000 for Ronnie there as a bonus. It means the other partner does not have a bonus. So here there's nothing, but for Ronnie we have got 11,000. So that's what we have there. Then we go to now to interest on capital. Interest on capital, remember, we have already calculated the other interest that we calculated there for the other partner, which is the other partner there is Martin Nike. We calculated the interest on capital here, and we got the figure that we got there was 104,000. 104,000, remember? So this is the figure that we are going to put for Martin Nike. For interest on capital, we've already calculated this one. Then we can now calculate for the other partner. We can now calculate for the other partner there. So we can just go back again to the instruction in terms of interest on capital and see what does it require us to do. So if you come here now, explanation of interest on capital, remember here, point number 3, the partners received interest on their capital balances at a rate of 6% per annum at the beginning of the year. The interest was increased by 2% with effect from 1 December. So before the increment, again, we do the same. Before the increment, it's 0.06 is the rate, and then we multiply by the capital balance that we have for Ronnie Jordan. So you see that the capital balance for Ronnie Jordan is here, which is 800,000. So we've got 800,000 for Ronnie Jordan. So you're going to use that one. So here we multiply by 800,000. And remember, before the increment, the months that we had before the increment, we can go back again to check how many months do we have before it increased to 2%. It was 1 December, and we had 9 months there. So we are multiplying by 9 over 12 there. And then let's try to see the amount that we get there. Let's calculate. We have 0.06, then we multiply by 800,000. And then we multiply by 9. Then the answer that we get, we divide by 12. you get 36,000. So you have 36,000 before the increment. So after the increment, now it was now 6 plus 2, and it was now 8%. So we are now saying 0.08 times we have the same capital balance, which is 800,000. Then you multiply by the number of months after the increment, we have 3/12. So we can as well calculate there to see what amount we have there. 0.08, then you multiply by 800,000. Then you multiply by 3. The answer that you get, you divide by 12. You get 16,000. So here it's now 16,000. Then for the total, now we add this one plus this one to get the total there for interest on capital. Let's try to see what we get there. So if we add the two, you are going to get 52,000. So that's the interest that we have for Ronnie. So we go back there and try to put that figure for 52,000. Here we've got 52,000. And for primary distribution, now we are adding this one plus this one plus this one. You've got nothing, so you're adding this one plus this one to get our primary distribution, which we are saying 203,200 plus 104,000 there. And obviously you are going to get 307,200. So here we have got 307,200. That's what we have. Then you add again 254,000 plus 11,000 plus 52,000. There you get 317,000. Yes, here we've got 317,000. So for secondary distribution, remember, we are going to say the figure that we have here for net profit for the total figure. We subtract 307,200 and subtract 317,000. So that's what we are going to do there. And then that the amount that we get, we apportion. We've got the apportion way that we are going to do there, that is explained in the question. So here we are saying we now say 1,180,400. Then we subtract this figure 307,200. Then we subtract 317. There. So let's try to calculate that one. We have got 1,180,400. Then we subtract 307,200. Then we subtract 317,000. Then we get 556,200. 556,200. That's what we have. So we are going to apportion this one, and we'll go back to see how are we going to apportion that one between the two partners. Here we got the instruction here on the last point. The remaining profit or losses are to be shared in the same ratio as their capital contributions. So we are going to use the capital contributions that we have there. We go to the balances, and that's where we've got the capital contributions there. You see that we've got 1,600,000 for Martin, and then for Ronnie we've got 800,000. So we are just going to use that ratio. So how are we going to use it? The denominator we add the two. 1,600,000 plus 800,000, we get 2,400,000. So this is going to be our denominator. And for Martin Knight, we are going to say 1,600,000 over 2,400,000. Then you multiply by the amount that we have there. So we'll start with Martin. Martin, we are saying, remember we are saying we've got 2,400,000. 2,400,000. So we are saying the total that we have for Martin, you can recheck there. The capital for Martin is 1,600,000. So we're going to say 1,600,000 over 2,400,000. Here, 1,600,000 over 2,400,000. When you multiply by this figure now, there. So we multiply by 556,200 over 1. And obviously, when you calculate that one, you get now the final distribution for Martin, which is 370,800. So you can put that one for Martin, 370,000. Here we've got 370,800. So that's what we have here. Then we do the same for Roni. Remember, Roni, the capital for Roni is 800. So if you're going to say 800,000 over 2,400,000 there. So we say 800. See there. You say 800 now for the other partner, then over 2,400,000. This is the denominator times this amount 556,200 over 1. So if you multiply that one, we are going to get 185,400. 185,400. So that's what we have for this one. We get 185,400. Right. So with that now we can now find the figure for net profit for the year in terms of how we are going to apportion there. So what we are doing there, to get the figure that is supposed to come here on Martin, we add now the primary distribution plus the secondary distribution to get this figure. So if you add this one and this one, there, the figure that we are going to get here, add this plus this, primary plus secondary, then you put the answer there. That's the net profit for the year for Martin. You get 678,000. You get 678,000. Then here again, 817,000 plus 185,400, you get 502,400. 502,400. So that's what we have there. So we go down. So in this sense now, if you add this one, 678,000 plus 502,400, we are supposed to get this one 1,180,400. This shows that you've done your calculations correctly there. Then we go to drawings. We are now on drawings here. So for drawings now, let's see. For drawings, we are now that one is pre-entered for the first partner. So for the second partner, we're going to check the amount for drawings that we have in the question. Drawings, we've got 213,000 here, 213,200. So we're going to put that one. 213,200. 213,200. So that's what we have. When you subtract here, then we are now on retained income. Retained income. So to get the figure for retained income, we are going to say the net profit for the year. We are going to say retained income, net profit for the year. Remember, it's this one, and then we subtract the figure for drawings, and then we get the figure for retained income. So if you subtract there, the answer that you are supposed to get the year for retained income is 235,200. So you do the same year on second partner, you're saying 502,400 minus 213,200. Then the figure that you get here is 289,200. Right. So that's what we have. Right now we go to the balance at the end. The balance at the end. So the balance at the end now, we are saying retained income plus balance at the beginning. So you are going to add this one plus this one to get this figure that we have there. So let's try to calculate there. If say 235,200, 235,200, then we add 21,600. You're going to get 256,800. 256,800. 256,800. That's the closing balance at the end. Then here we add this one plus this one. You are supposed to get, so you're saying 289,200 plus 30,800. Sorry, minus 30,800. Minus 30,800. You get 258,400. This one is a negative, so that's why we have subtracted here. So that is what we have, guys. And then we see that the total marks that we have there is 20 marks, which is very important to take note. Quite a lot of marks. So the total marks for the question it becomes 20 plus 5 marks for the interest on capital to make 25 marks. So that is what we have, guys. Let's still hang on there. We are still coming with other videos for more questions as we prepare for exams. Let's stay tuned. Those who have been subscribed, please subscribe and share. I will meet again in the next video. Stay blessed.